What's up, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is October 29th, 2021. Today was month end. We're going to talk about the price action in the indices for month end. We're going to go under the hood, check out our sectors and style factors. We'll talk about my trading report card, what I traded for today. But before we jump into all that, quick first disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. Let's dive into the video. All right, so performance for today. These are our box scores. We had the S&P 500 finishing up 0.2% as measured by the SPY. We had the NASDAQ QQQ finishing up 0.49%. Who would have thought with Amazon and Apple whiffing their earnings reports that the NASDAQ would be the top performer? We'll jump into how that occurred shortly. IWM small caps down 0.03%, our worst performer on the day after being the top performer by far yesterday. And then we have the Dow Jones up 0.26%. Overall, we can see volatility came down in both the SPY and the NASDAQ, but it rose in the small caps and the Dow Jones. It looked like there was a flight to some of those mega cap tech names today. And breadth was pretty mixed across the board. We had best breadth in the NASDAQ with 58% advancers, worst breadth in the S&P 500 with only 42% advancers. So yeah, definitely a little bit strange when you have the S&P 500 rising, but only 42% of the stocks in the index on the rise. Pension rebalance. This is something we talked about for the past couple days, but we are now past the rebalance. Let's take a look at our headline indices. So SPY, and this is the S&P 500 right here. My trend model is back at a +3. It flipped to a +3 this morning. And you can see here, we had a couple days of consolidation, and today we actually pushed out of this consolidation zone. It does look like there were, some gains that occurred in the after hours market that really pushed this thing up to even another level. Now we're at 4,600 for the S&P 500. This red line is the prior all-time high. So yeah, we are now trading in brand new all-time high territory. Keep in mind, we are extended from this 20-day simple moving average. And we're also going to have a new monthly value area for next month. So this is going to light up on Monday, because Monday is going to be the first November day of trading. And then we're going to have options expiration coming up in just a few short weeks. So things are moving fast into year end. But overall, the trend in this index is very strong. So yeah, we're pretty much in a raging bull market right now. We potentially have, and I think this is another reason why nobody's getting out of the market. We potentially have another $3 trillion in stimulus that could be approved within the next couple of weeks. So if you're a fund manager, do you really want to hop out of the market and all of a sudden that stimulus goes through and you're like, oh my gosh, and everything's ripping? No. And the seasonality, I coded this into my toss as well. Seasonality is currently a tailwind for the market. NASDAQ was our top performer. Look at this. So we finally got the breakout from this monthly value area. The NASDAQ had been an underperformer throughout this corrective sequence over here in September. And it was, inflation fears, rising yields, which are going to hurt these bond proxies. Now, basically, everyone's like, oh, no worries, NASDAQ stocks are going to the moon. So let's take a look actually at our treasuries and just see where they are. The relationship between yields and the NASDAQ is so wonky. Look at this. So yields overall, have moved higher because you can see these 10-year treasury futures are lower. But it's kind of like everyone sells off all their exposure. And then at a certain level, it's just like, oh, well, yields are still moving higher, but let's just add back our NASDAQ exposure. It's kind of interesting. See, we'll have to see. I would imagine that if yields keep going higher and these treasury futures keep moving lower, that could be a problem for the NASDAQ. But maybe it's those NASDAQ stocks looking through this and saying, hey, we don't actually think yields are going to move much higher. Let's take a look at our Russell 2000. Russell 2000 had a really nice ripper of a bullish day yesterday, and now today really just consolidated. Again, Monday is going to be the first trading day of November. November is when the seasonality for the small caps really turns on in a major way. So let's see if we end up getting that push to new highs in the small caps, or if they just continue to get left behind. We'll have to see. And then we have the Dow Jones. The dogs of the Dow up 0.36%. Even the Dow Jones looks pretty good, pushing out of this consolidation. And we're not quite trading at that Venom R1 pivot level. But yeah, we're trading at a new high for the Dow Jones as well. So yeah, overall, we're seeing some nice strength in the market, at the headline index level. Let's dive into our heat map. So yesterday, Apple and Amazon both reported earnings, and they both whiffed their earnings reports. After, looking at the numbers, I was like, they missed, but it's not really like too bad. Amazon, look at this. Everyone just came in and bought the dip. It opened very close to the lows. We had a little shakeout down here, but then we just ripped for most of the day, and we closed above the key moving averages. So this was just, dip buying in Amazon. Nothing too bad about that. And then in Apple, we see the same exact thing. Check it out. Dip buying on high volume, opening up very close to the lows and closing pretty much right on the highs. So yeah, the market was able to weather that, the misses from those two companies, and it was being held up by, Microsoft had strong action, Netflix, Tesla, Google, even Facebook, which I took a position in today, all strong action. But look at this. So a lot of those mega caps are really pulling their weight. Healthcare was as well. But a lot of these more cyclical areas of the market, you can see they weren't as strong of performers. Let's take a look at our sectors, and we can see solar energy stocks and blockchain are at the top of our list. I am mega overweight in both of those areas. So I try to make sure that in my trading account and in the Pristine Capital tactical portfolio, which I actually rebalanced. I stayed up super late last night, and I was rebalancing the tactical portfolio, and I was also watching just these trader interviews that were awesome. And yeah, I got that rebalanced, and I allocated even more to solar and blockchain. Let's take a look what underperformed. So we did have ARKG, this genomics fund, down 2%. Chinese internet's getting sparked, and really just international markets as a whole not nearly as good as the United States today. These cannabis names continue to drop, and then in terms of some strength, yeah, we had those two at the top, and it looks like the SPAC ETF also did pretty well. Style factors, strongest style factor was quality. So yeah, that makes sense with Nvidia rising, Tesla, Netflix, those big mega cap names. And then we had growth up 0.52%. In terms of laggards, we had high div, low vol lagging, which is a good thing. That's a pretty risk off area of the market. Of course, all these international style factors really underperformed as well. All right, let's take a look. And then of course we're entering this super bullish seasonality. Let's take a look at my trades for the day. And so early on in the day, I took a day trade in Morgan Stanley, and this one pretty much ended up being a wash. So I took a small position, November 19th, 102 calls for 270, took a target on part of that position for $3, and then I took the remainder of the position off for 248. So I think on this one I lost a couple pennies. Yeah, Morgan Stanley, I was looking for the financials to have a nice little rally, because I saw that there was a lot of unusual options activity from Morgan Stanley the other day. And yeah, this name ended up closing up slightly positive, but it just really wasn't moving the way that I wanted it to, or that I envisioned it might. See, I took that off for basically a scratch. And then what else did I do? ENPH. So one of the members in our community was like, what do you plan on doing with this one? And then I looked and I was like, you know what? I have a nice winner in these November calls, but ENPH I really think is going to be a winner all throughout Q4 of 2021. I already have a common stock position in ENPH. When they reported earnings, I threw that right on in the after hours. So I'm up almost 20% on that common stock position. I took off these calls for $15.55. I had paid $12.05 for those. So nice little winner. I would call that like a nice strong single. And then I rolled that out to the January 21st 250 calls because there's a high level of dealer gamma at that 250 strike. The other day when I was looking at the options order flow, I saw players going for that 250 strike. So this is a key example of the power earnings gap set up at work. This name reported super strong earnings, institutions flooded in, and look at this. This is a day 2 and now a day 3 of continued strong action. Take a look at the weekly chart. Look at this. So really nice breakout. So I would say like Morgan Stanley, my trade today, in terms of stock selection, that one, I think it was a pretty good candidate, but it just didn't work out. This one was like very good stock selection because it was in a really strong group of the market and it really surprised on the earnings. See, I just rolled that out in time. And that was probably my highlight of the day, to be honest. I got long a Facebook calendar spread, a call calendar spread at the 350 strike. And really my rationale for this one was, hey, Facebook, it's trading down to the 200-day moving average. All I see online are people making fun of Mark Zuckerberg, making fun of the rebrand to Meta. But to be honest, is that rebrand going to be a good thing? Yes, I think it will be, because everyone, like, even just the word Facebook, it's like, blah, like it just has this bad connotation. And what I'm noticing is this yellow line's the 200-day moving average. It's not like Facebook is like, oh, we're breaking down and we're just making new lows. This stock's down 17% from the highs. Okay, they had some bad issues. They had like a scandal, whatever. Does it still print money like a cash register? Absolutely. They're saying they want to get into the metaverse, which literally is the future of humanity, pretty much. Mark Zuckerberg, I would never count that guy out. I know people think he's creepy and weird, but is the guy a genius? Yes. So I was like, I'm going to take the opportunity. I'm going to buy this at the 200-day moving average. So that's what I did there. So in terms of stock selection, that's like, you could make the argument either way. I did use the call calendar spread, which means, hey, if Facebook just starts consolidating sideways, I'm still going to get paid because I have the short leg of my call spread. So I would say for this situation, I would say that was pretty good stock selection. And then here, towards the end of the day, I got long some Cloudflare November 19th puts at the 195 strike for 1447. And Cloudflare, I've been going in and out short in this name. I had one short trade on it, lost that one, did another one, had a nice base hit. I was like, you know what, Cloudflare is even higher. I'm going to re-enter on the short side. My short thesis still remains that this one is basically priced for perfection into that earnings print. But Cloudflare, I shorted it when it was up maybe like 4.7%. And I don't really have many shorts in my portfolio, to be honest. I only have one like very small one. But yeah, for this one, it closed towards the highs. So I actually closed my short position out into the close. And I really just did that for prudence and for risk management. Hey, I don't want to carry this into the weekend. What happens if we get a nice gap up? What happens if Cloudflare, it's so close to $200 now that it's almost like that psychological level, like 200. Would I be shocked if we hit 200? No. And I would much rather reshort it when it gets to 200. So into the close, last thing I did just to clean up was I closed out those November 19th puts for $13.65. I'd paid $14.47. So lost like single digit percentage on those options contracts. I basically just said, hey, I think we can get to 200, but like to reshort it there. So in terms of, this is something that I want to introduce. I'm kind of toying around with it. This is like really quickly, I just scratched it together, a trader report card. And this is something, I may not include it in this video every day, but this is something I want to do. And just look at, how I approach the trading day and just grade myself. It's going to be subjective. I'll never be perfect in grading my own self. Like, I can't look at myself objectively, but I can at least try. So this was me rating myself on a scale of 1 to 5 for preparation, stock selection, and risk management. And I'm going to be adding a video. I'm going to be creating a video for Pristine Capital members all about stock selection, because into 2022, stock selection is something that I really want to work on. I have a lot of ideas for it, because in the market, stock selection is just so darn important. Like being able to filter, because a lot of what you're going to see like on Twitter or even just in your own process, like you screen for stocks and you end up with a list of like these 20 stocks look good. And you're kind of like, which stocks do I trade? Like you're looking at all of them, you miss all of them. So stock selection, picking like what's a really good candidate? Does it have a catalyst? Does it have volume coming in? What's going on? Is it liquid? Is it in a really nice trend? That's something I want to work on. So in terms of a 1 to 5 scale for all these, prep, I gave myself a 3. I came in with a bunch of good looking charts that I prepped the night before, but I stayed up so late last night that I ended up getting a bit of a later start on the trading desk. So I gave myself a 3 out of 5. I came in with the setups I was looking for, but could have been a little bit better in the morning. Stock selection, I gave myself also a 3 out of 5. I think, Facebook might end up working for me. Like, I kind of think it's going to work for me. And Morgan Stanley, I think, was like a solid attempt. But I think there were some stocks that were more in play today that I could have really attacked. Like, for me, Enphase yesterday, that was excellent stock selection. So I can give myself the pat on the back for that one. Today, I can't give myself a 5 on stock selection. And then for risk management, I did give myself a 5. I think what got me to that 5 was this maneuver that I did in net, where the position was a very small loser. The stock didn't fade into the close like I thought it might, so I just took it right off. So yeah, that is my trading report card for the day. And then let's take a quick look at our big tech options order flow, and we'll look for some good candidates for tomorrow. Yeah, those are the things I traded. Let's also go to, crypto, very strong action today. Hut mining. So this is one of my biggest positions that I have on right now. I have the 10 by 12 call spread, and this one really worked very nicely for me. So Hut approaching the top end of this range, and for this weekend, for crypto, I'm going to be looking to see, hey, can we actually get the breakout in Bitcoin and Ethereum? Ethereum is actually much closer. Look at this. We're literally breaking out. So yeah, super interesting. All right, big tech options order flow. Let's dive in. And if you're interested in using Big Tech, you can go ahead and click the link that's in the description to this video, and I'll give you a discount on Big Tech. Let's take a look. Check it out. Okay, so let's look at our options races. Today's combined flows. Boom, of course Tesla's in the lead. Everyone's buying like a gajillion call options on Tesla. And then we have this BKKT. This one's been very active. Lucid has also been pretty strong within this EV space. Let's take a look. Oh, and then IWM, we have activity here. Let's take a look at some of these. Wow, BKKT had 649 million. That is a lot for a SPAC. So let's look at our TradeScape. So Tesla, everyone's just jamming those calls. The November 5th, the October 29th, there were so many 1,100 calls traded for October 29th going out to January. So of course Tesla, still making great moves. Netflix, wow, look at this. More flow for Netflix. So this is getting a little bit strange to me, I must say. So for Netflix, I traded this one to the upside, had a really nice sequence with it. But this one, I don't know. How could I initiate a new position here? This one I would have to buy on a pullback. But a lot of these, everyone's just spamming calls now that they're overextended. So that's a little sus. But anyway. All right, BKKT. Let's check this one out. Oh my gosh, look at all these are calls. 14 strike, 7.5 strike, 10 strike, 11 strike. Wow. Is this kind of like the new kid on the block in terms of crypto? What? It closed at 42 bucks. That is insane. So I traded this one. I had like a 72% winner in BKKT the other day. So I was pretty happy with that. If I was here, I would be selling this thing to the high heavens. Like, I looked at the SPAC deck for this one. It wasn't that impressive to me, but yeah, it looks very good. And then let's take a look. I don't know why this did this. And we saw some IWM flow. Let's look at that. Okay, Baba. This one, all these Chinese names really had a bad day today. Alibaba seeing bullish flow though. It's interesting. Lucid. A lot of flow. October 29th. So this kind of looks like another one where they're just kind of like gamma squeezing it. But there are longer term players too. They're going out to January. Lucid, this is a stock. I have it sitting in an IRA from a long time ago and I just held on to it. Now let's see. There was IWM flow. Let's look at it. QS. Vegas from our Twitter spaces. Shout out to Vegas. She brought this one to the group. QS had a very nice move today. Yeah, look at that. Up 13.94%. And then where's the IWM? Give me the goods. Give me the goods. Where is it? Oh, right there. Everyone's buying puts. Jeez. They're going out to January 2023. They're like, short the rip. Wow. So when I do my weekend market analysis, I want to see how are the hedge funds positioned in the IWM. But yeah, that about does it for our big tech options order flow, and that about does it for this recap video. Hope you all had an awesome trading session, and I will see you all tomorrow. Oh yeah, and by the way, also leave a comment in the description of the video on what you think of the trading report card, if you think it's helpful, if you do a trading report card, and how you do your post analysis. All right, I'm out.